So the end of June marked it broke the record for the longest economic expansion in U.S. history. So the previous record was 120 months, according to the National Bureau of Economic Research, from March 1991 to March of 2001. So we are now past that. Starting in June of 2009, this record-setting run saw GDP growing cumulatively by 25%, far slower than previous expansions. While the unemployment rate has dropped to 3.6% in May, the lowest since 1969, job growth has been relatively slower than during other post-war recoveries. This marks the 121st month of the economic expansion arising out of the Great Financial Crisis, making it the longest run on record going back to 1854 for the U.S. Insane, right? And my title, and I've added in here with the economic cartoon, I added in Jerome Powell. I did a little photoshopping here to great economic cartoon because Janet Yellen was in there. But this is now the longest fake economic expansion in U.S. history, thanks to all these global central bankers. The 5 or 6 largest ones in the Bank of Japan, the European Central Bank, the Federal Reserve, and of course now the People's Bank of China, which is catching up on lost time. So on top of this, I want to show you that the economy is not, the results for the economy are not real. So today, on Friday, July 5th, we had supposedly good jobs numbers, okay? And the market was reacting to that. But economist David Rosenberg, who is well respected, let me read you some of his analysis from his tweet. He summarizes things. If you don't follow him on Twitter, I recommend following him on Twitter. He's Econ Guy Rosie, I believe. David Rosenberg. Very well respected. He's one of the few rational Keynesians out there. So here's his comments about today's job data, which all the mainstream media people and the mainstream financial people are touting as great. Okay, let me, damn it, my phone just went back to the screen again, screenshot. It just went back to the free screen. Okay, here we go. Half the payroll gain came from the birth-death BLS guesstimate, and prime adult male employment actually sagged 97,000 in June. Stop phone, you're pissing me off. Oh, it just went back again. Collapsing 338,000 over the past 3 months, which hasn't happened since September of 2009. Lift open the shiny hood and check out the sputtering engine. So, that is someone who actually dove into the jobs numbers. I watched mainstream media. I watched mainstream financial media for a while today. None of that was mentioned. Absolutely none of it. Not a single expert came on and talked about it. So they're not even having counter-argument bear people on in the time I saw. Now, I didn't spend hours and hours watching financial media TV, but they didn't bring a single person to say, hey, there's a problem with this data. Okay, the birth-death model, if you don't believe it, look it up. There was a listener who was questioning me about GDP when I claimed that it's fake. Okay, GDP, if you're not familiar in the US, 70% of GDP, about 70%, is based on consumer spending. And the stuff that we're seeing, I've talked about this now for a long time, but the data that's coming out, the surveys and the other data is worse, okay, for consumers. Let me read some of it. So there was a story on Zero Hedge from July 2nd, why a third of Americans have cut spending over the last year. So this is a survey by CNBC. A third of all Americans have cut their spending this year, according to a new survey by CNBC. And for a country indoctrinated by a system that encourages spending and abhors savings, readers may be surprised to learn that a majority of the respondents, that 54% of survey respondents still describe themselves as savers. The survey polled men and women across the country and looked at changes in people's money behaviors. Many people are taking a critical look at their spending and preparing for what-ifs, their survey concluded, which would be smarter, more rational common sense, because the other research we've seen in surveys is that most Americans don't even have $500 or $400 for an emergency, for their transmission blowing or medical expense or any of these things. For a rainy day emergency, they don't have savings. So people have money in their retirement account, but they don't have any emergency savings. Okay, continuing with the article, spending versus saving habits were relatively equal across age groups. The 35 to 44-year-old group showed higher levels of spending, which then moved back toward saving as people needed retirement. 63% of seniors described themselves as savers and 28% described themselves as spenders. And regardless of demographic, a third of Americans say that they've cut spending over the last year. They have done this as a result of a loss of household income, new debt, fears of recessions, and medical expenses. Okay, I could go on and on with this article, but if you want to go in depth on this article, I'll attach a link to it in the information section after the video is over. But again, 70% of the U.S. economy is based on consumer spending. Consumer spending is slowing down. Trump is painting this narrative that we have the greatest economy ever. The jobs data, and I just showed you people who actually dug through it, half of it is basically fake from the birth-death model. Someone's asking about the July rate cut. Okay, so here's the thing. It doesn't matter. I was practicing the rocks flips. It doesn't matter. Okay? It doesn't matter. Okay? Whether or not unless you're a short-term trader. If you're a short-term trader, okay, it matters. But if you're not a short-term trader, it doesn't matter whether the Fed cuts rates once with a 25 basis point cut in July or twice in July or doesn't cut at all. They will eventually, because Jerome Powell almost blew up the bond market in December with that rate hike. That's how leveraged the U.S. economy is. That's how leveraged U.S. corporations are. That's how bad the junk bond debt is. That's how bad U.S. corporate bonds are. He almost blew up the entire market. I believe there was many weeks where there was no new corporate bond or junk debt issuances. So this is the longest fake expansion in U.S. history now. Pretty crazy, huh? Let me continue now with more evidence of the other part of GDP. So the GDP number, which by the way does not account for a real inflation rate. So GDP is always nominal. This GDP number that you're hearing on the mainstream media, on the mainstream financial media, you're reading in the newspaper, if you read mainstream media newspaper, none of it is accounting for real inflation rate. Okay, it is nominal GDP. Almost everyone leaves that out. With a real inflation rate, it is negative. The economy is contracting. And that's why you're seeing not only consumer behavior like that, but the economy is not creating a lot of high-paying full-time jobs. Okay, the economy is creating jobs, but not high-paying full-time jobs. There's a big difference. It's not creating a lot of high-paying full-time jobs. And I've talked about this for a while now. Credit card debt for consumers went up a lot in 2018. I think over $800 billion it went up in 2018. So this would make sense now that we're seeing surveys come out saying that the consumer is cutting spending. Well, yeah, duh. Because they had tons of credit card debt and they can't keep up the spending because their income's not growing. So they either have to pay off the credit card debt or they're going to default. And on top of this, we have in the last year or so, we had that news come out from the Federal Reserve's own data about the auto industry and how subprime auto loans, people with bad credit, I think they're more than 3 months late on their auto loan payment. So there's over 6 million auto loans that are 3 months behind, basically defaulted, and those cars are going to be repossessed. And that was from the Federal Reserve's own data. So there's a lot of contradictions here in different data. It's cross currents. Meanwhile, everything from the mainstream media and mainstream financial media is so heavily spun. Anything positive that they can pull out, any little needle in the haystack, any little diamond in the pile of shit that they can pull out that is positive, they will find it. The jobs numbers are almost all fake. Yeah. So there might have been a lot of part-time jobs created, but the real thing about the jobs numbers is the labor participation rate, which has not increased. So the GDP, which is made up mostly of consumer spending and federal government spending, and by the way, if you're an Austrian school economist, if you read someone named Murray Rothbard, he makes a very good argument that federal government spending should be subtracted from GDP. He says it's enormous misallocation of capital, enormous waste of resources. It does not produce positive economic growth, making bombs and hiring government bureaucrats. And there's other details to his argument. You can look it up on the Mises Institute website. So the jobs numbers, the algorithms are going to read this stuff and say, oh, that's good. But the reality of the situation is very different than the headlines and very different than how the algorithms, the high-frequency trading algorithms are reacting. I have another article here that young people are trapped in debt in distressed communities. So people in my age demographic or people in college now or out, they are very regretful of going to college. They're very regretful of the major or majors they picked with the student loan debt they have. They realize that their job prospects on the job market are not good and that it probably would have been better in some cases to not go to college at all with the student loan debt that they have. So you have subprime auto and auto loan debt problems, you have student loan debt problems, you have credit card debt problems. Meanwhile, you have President Trump and the mainstream media and mainstream financial media with this other narrative. And the Democrats in the debates are actually starting to say the economy is not doing really well, but they don't know how to argue why it's not doing very well because they're not looking at shadow stats or anything like that. The Democrats just argue on feelings over facts anyway. Oh, and there's another new survey from, let me see if I can get the source here. 40% of Americans think a recession is looming. So Bankrate.com, a new survey from Bankrate.com, which is not some crazy right-wing or libertarian website. It's like basically a normal personal finance website for a tiny little online savings account, I think, with Bankrate, to show you which has the best online savings accounts or something like that. Shows that nearly 40% of Americans believe the next recession is already here or awaits us in the next 12 months. And if you want to read more about this, you can take a look. So yes, the jobs numbers are fake. Sometimes they're more fake than others. And the GDP, someone was like, prove that the GDP is fake. I had to block this guy because of how annoying he was. The GDP numbers are fake. Governments always inflate GDP numbers so they can borrow for less. So their credit rating doesn't get downgraded. And credit ratings should not be based on GDP. GDP is gross domestic product is very inefficient. There's a lot of problems counting these metrics. I remember in the European Union, I think they started making an assumption for counting like prostitution and people working in the black market, like underground economy, all cash. They started adding that in because of how bad things were. This was maybe 6 or 7 years ago, right around Greece, right around with the problems in Greece and a little bit before Cyprus, I think. Well, GDP is bogus anyway. And so the majority of GDP is U.S. consumer spending, and the consumer, with a lot of either surveys or data with credit cards and student loan debt, and also the problems with the auto loans, the consumer definitely looks tapped out. Now, if you own a lot of assets, if you're a consumer that has benefited from the rise in real estate prices, stock prices, this bond market rally, you're a different segment of the consumer market. But the regular guys, the people on Main Street, have not really benefited that much. Luminary says we have been in recession for the last 10 years. The U.S. has been living on credit for the last 10 years. Yeah, so has pretty much every other major country. China actually, besides the other central banks like the Federal Reserve and the Bank of Japan and the European Central Bank doing QE and changing the accounting laws for the banks to try to engineer a fake economic recovery in 2009, China doing this massive QE and spending, building massive amounts of infrastructure and housing bubble, that has actually caused a phony recovery too. And it's many trillions of dollars in misallocations of capital and trillions of dollars in flight capital and laundered money has left China. Talk to the people in Vancouver about their housing market, if you don't believe me. Also Australia. Yep, Greg says the numbers including inflation, employment are all bogus, dependable only on lies. Yep. Yeah, I was going to mention on my shrinkflation video yesterday, I forgot to, about the CPI, the Consumer Price Index, how phony it is. Basically, if anything rises too rapidly in price, they look for a substitution or a hedonic adjustment or geometric weighting, or now they have a new chain CPI thing. There's just any way they can to not pay a cost of living adjustment. There's a great interview I put at the end of yesterday's shrinkflation short video from Ed Batowski, who came up with the Chapwood Inflation Index, which I think is the most accurate inflation index in the US. And he talks about how his mom was a divorced single mom, and the government was screwing her out of cost of living adjustments. So a lot of retirees and people on the government dole do not get accurate payments because the government, it's in their incentive interest to underreport. Okay, well, I just wanted to do an update on this short video for you guys. Trump also with the trade war. One of my China sources sent me something about the trade war. China won't buy soybeans until White House clarifies position. Prices on soybeans are down. What I think Trump could do now is he's misplayed this on the trade war. I'm not in favor of increasing tariffs or anyone winning a trade war, but from Trump's perspective, I'm just going to analyze this for a second, that he probably should not have conceded this stuff to China initially, and he probably should have hiked the tariffs. He probably will do that in the next couple of months, increase tariffs. And then after he increased tariffs, he may get the Fed to do their rate cuts. Because I think Trump definitely wants the rate cuts, and the Fed may hold off on the rate cuts now, because people are saying Bank of America just said that the Fed in July may only do a 25 basis point rate cut instead of 50, and there's other people saying that the Fed won't do any rate cuts at all in July. Maybe they'll wait until September, if that, but maybe, or later in the year. So the bottom line, though, is that unless you are a short-term trader with this rate cut stuff, it really does not matter, because all the major central banks, whether it's the Bank of Japan, the European Central Bank, the Federal Reserve, they're all trapped. Okay, the European Central Bank cannot stop QE now because of what the misallocations and distortions they have done in the European government bond market, the European banking system. They can't really stop that. Those things would collapse immediately. So this game, this phony game of phony government economic data in the CPI, the GDP, the jobs numbers, the inflation data, it's going to go on as long as it can. And unfortunately, as I've been repeating ad nauseum, and I hate repeating it, but the majority of people who are either lazy, brainwashed, or downright stupid will continue to blame capitalism for all the problems related to this and related in society now. I hear, I'm going to go on another rant, so screw this, but I mean, I hear now women that go from bad guy to bad guy to bad guy having sex with guys they hate, and they are blaming it on capitalism now too. That's just ridiculous. I mean, look in the goddamn mirror. You're an adult. Stop blaming things that you can't judge people correctly. Stop blaming it on capitalism. Capitalism is like the biggest punching bag out there. Whenever there's a problem in society or someone screws up bad, it's capitalism's fault no matter what. It's just ridiculous. And I can guarantee you, almost all these people I've spoken to, they cannot even give a proper definition of what capitalism even is. I have yet to meet a person who says they hate capitalism and says really nasty things about it and writes me one page of stuff about that can actually give me a proper definition of capitalism. They cannot do it. They just hate it. They don't know why a lot of cases. They can't even give a proper definition of it. Oh, and one last thing. I'm getting, because of my lecture series on mining stocks, I'm getting one email per week now at least of people asking me to do all this in-depth research for free for hours on their mining stocks. Like, oh, Jason, blah, blah, blah mining stock. I put thousands of dollars into this mining stock. I saw it on a YouTube video, and I think it's good, but can you do research for me for free? I'm not going to do that. Okay, man? I do these lectures. I get paid a few dollars for that. Once in a while, people give me a super chat. So thank you very much for people who tip me on the super chat. Thank you very much to the people who donate on the Patreon. I know 30 people have canceled on their Patreon contributions, reduced or canceled in the last couple months, but it is what it is. So that's it for now for the short video. I'll talk to you guys later, probably in a couple days. I have some other ideas for content, and I am working on some other interviews for next week. Bye for now.